Turbo Trading with head trader Robert Knight, MBA.
This is a video on chart patterns we follow. One of the ones that we follow was developed by Elliott Wave, or by Mr. Elliott's wave theory, and it says that stocks trade in waves of 5 and correct in waves of 3. And so, and inside a wave down, you can have a 5-wave move, and then a pop, and then another 5-wave move to the downside. That, and also some other patterns that we look at, head and shoulders patterns. But let's just have a quick look at this in SPY, with no other particular reason but just to try to identify these patterns. So we see on the SPY here this morning, it sold off quite sharply. Here's your wave 1 down. Then you get a 3-wave corrective, 1, 2, 3-wave corrective, wave 2. And in this case, you get a very short wave 3 down. Here's your wave 4, and then wave 5. Now this is all inside of wave 1. Then you get you get a major move. So this is wave 1 down. So you get a 5-wave move down in wave 1. Then you get a 3-wave corrective, 1, 2, 3-wave corrective, or even a 1, 2, 3-wave corrective, wave 2. Now we're into wave 3. 1, 2, 3, 4, 5. Wave down in wave 3. Then we get a 3-wave corrective, wave 4. And then we get wave 5. Now this quite often happens in wave 5 where you get it's truncated. You get a 1, 2, 3, but it holds the support there at the bottom of the fifth of the fifth. And it held support. So even though so we call that it's truncated. Now this is not that reliable, a truncated fifth, but in this case it does hold. And it got back up to this, I had drawn a line here. This is the neckline, 468.5, because you can see now perhaps we got a left shoulder on big volume, the head on big volume, and then the right shoulder on low volume. That's very typical. So here's your head and shoulder. It's not so well defined, but you could call it, this looks like a head and shoulder pattern. Here's your key neckline here at the 468.50. It did pop out through it and it has come back a bit. So, first time out, it may not make it. It is now in a bit of a channel here. We'll see if it holds this 20-period moving average here, or this trend line, and goes. So maybe now this is the neckline like this, which would also be an ascending triangle or ascending wedge. So there's just a few patterns that we want to watch and talk, and follow and get an idea where the markets are going to go. The thing about these patterns, they fit into every stock. It doesn't have to be an index to get these types of patterns. SPY quite often is much more defined. A 5-wave move down or up is quite often more defined than some other charts. And the other thing is it could be any time frame too. Whichever time frame you're looking at. I mean, here's the 1 minute. 1, 2, 3, 4, 5-wave move down. 1, 2, 3, recover on 2. 1, 2, 3, 4, 5-wave move down, wave 3. 1, 2, 3, wave 4. Truncated fifth. That's a 1-minute chart. On the 5-minute chart, it's not so well defined, but you might see this as the 1, 2, 3. On a 5-minute, this could be 1, 2, 3, 4. Maybe look for another rollover 5. And then on the daily, I mean, obviously not. We don't see it here, and I don't really see any typical 5-wave patterns right at the moment. But so it doesn't really matter what the time frame is. The patterns are all the same.
Don't forget to like and subscribe to our channel.